Hey friends, good evening. Welcome back to my YouTube channel. This is Sachin Nachnani. Infosys has just come out with its third quarter results and the numbers look very strong on all fronts. I'll be covering the result analysis in brief and will try to cover as much analysis as possible across fundamental, technical, and option chain analysis. So, do watch this video till the end. And if you have still not subscribed to my YouTube channel, please do so. So, before I start with the actual financial analysis, let me first take you to the expectations that were there from Infosys results. So, this we can see over here is the CNBC TV 18 poll estimates for Infosys Q3 results, and these are the actual results that have come out. So if we start with revenue, the revenue has been better than estimates by over 2%, both in rupee terms and in dollar terms. It has been better by 2.5%. EBIT, that is earnings before interest and tax, has been better than estimates by 3.6%, and the EBIT margin has also been better by 40 basis points, that is 0.4%. It has come to over 25% at 25.4%. And lastly, most importantly, the profit after tax has come to 5197 crores against an expectation of 5084 crores. So a beat of over 110 crores, which is better than estimates by 2.2%. Having known this, now let us see the actual numbers and how they stack up. Just again, we will see that the revenue is better by 5.5% on a QOQ basis. Friends, I have explained in my video why I always prefer referring to data comparison on a QOQ basis for IT companies. So please watch my earlier videos. Operating profit margin has come to 25.4%. This is the revenue, and profit before tax has come to 7151 crores, which is better by 5.9% on a quarter over quarter basis. And finally, the net profit after tax has seen a growth of 7.3% on a quarter over quarter basis. The EPS, that is earnings per share, comes to rupees 12.23 for this quarter. Even if we see over here on a YOY basis, that is year over year, comparing with 31st December 2019, all the numbers have seen a growth over the previous year, same quarter. Well, friends, this is a 222 page PDF file. Yes, over 200 pages of information that is contained in the press release of Infosys results. I am choosing the best and the most important highlights. So the most important highlight is the large deal signing of over $7 billion. Well, do you know how much it translates to into rupee terms? It translates to over 50,000 crore rupees. Yes, this is the single largest deal signing by Infosys in one quarter. Then digital constant currency growth is over 31% on a YOY basis. Operating margin we have already seen is over 25.4%. Revenue growth on a QOQ basis in constant currency terms is 5.3, which is again better than expectations of the market. Also, we have seen that because of COVID, the spending of clients on digital and cloud has increased sharply, and the same is reflected for Infosys also, where digital component now forms more than 50% of the total revenues, which over has gone up from 47% in the previous quarter, and which last year was just over 40%. COVID has led to a sharp increase in IT expenditure by most companies, especially in digital and cloud technologies. Here we can see the total number of active clients, and that is over 1560 clients. The number of addition during the quarter on a gross basis is 139, which is again much higher than the previous quarter and the same quarter in previous year. This is a segregation of clients according to revenue contribution in different buckets. The top 5 clients contribute less than 11% now, and 95% of clients are doing repeat business with Infosys. Well, Infosys employs slightly less than 2.5 lakh employees now. The attrition is just at 10%, which has actually gone up on a QOQ basis, but it has come down on a YOY basis. This is slightly higher than TCS attrition. The percentage of women employees in Infosys is over 38% now, which is higher than YOY and a Q on QOQ and YOY basis. I would also like to highlight two important things which pertain to the revenue growth and operating margin guidance for this financial year. So revenue growth guidance increases to 4.5 to 5% in constant currency terms. This is again better than what the market was expecting. And the operating margin guidance band has also been increased from 24 to 24.5%. This is again slightly better than market estimates. So as we can see that Infosys has delivered an all-round beat and the results are better than market expectations. So let's have a look at the fundamental valuation now. The market capitalization of Infosys is slightly less than 6 lakh crores. On a face value of 5 rupees, the share price is trading at 1387 rupees, and today it hit an all-time high of 1392 rupees. See that the 52-week low is 511. So that means the stock has gone up by 2.5 times from its 52-week low, which must have hit during March. If we look at the trailing 12-month EPS, that is earning per share, it is 39 rupees, and the PE comes to 35.5. As compared to TCS, it has been slightly cheaper because on a PE basis. However, because after the results, it is expected that the PE for Infosys will go up further, and because the ROE is in the region of 25%, plus in the results, the growth has been very strong across all parameters, and the $7 billion deal signing is very strong. Therefore, there can be further upside to the stock price. However, looking at it purely from a PE perspective, to me the stock appears fairly valued purely on a fundamental basis. So if somebody is holding the shares, well, you can continue to hold for further upside. However, purely from a fundamental perspective, I would not suggest anyone to buy the shares. Of course, you need to consult your own financial advisor before making any decisions. This is the daily chart of Infosys and see the kind of momentum it has had after declaring the results in the previous quarter. And from those levels, it has only been going steadily higher, making higher highs and higher lows. There is tremendous strength in the chart of Infosys, and tomorrow morning, at least, there can be some bit of gap up, quite possibly over 1400 rupees. The price action is also very strong, so looks that the stock can possibly target 1450 also tomorrow. However, if there is a big gap up and the stock opens at or around 1450 or slightly higher than that, please do not chase the stock. It is possible that, as we have seen in the previous quarter also, that the stock price tends to come down at the same level where it opened after a few days. So don't chase the stock and gap up. Wait for some correction and subsequently you can take a trading view. So this is what the charts are indicating as of now. Let's have a look at the option chain analysis for Infosys. And as we can see that on the call side, the highest open interest is at 1400 rupees with over 51 lakh shares in open interest, and that has also seen the highest open interest addition at over 13 lakh shares. And after 1400, the next highest open interest of 30 lakhs is at 1500 strike price. Now we need to see that because the results are so strong, it is quite possible that there will be a big gap up. Now whether or not the gap up sustains because of the strength of the call writers at 1400, or the call writers are afraid and wind down their position, that is unwind their position, that we need to see tomorrow morning only. But it is quite possible that there will be good bit of unwinding in the 1400 call option, and 1500 call option will see the maximum open interest and open interest addition tomorrow. So we need to see the price action tomorrow, but in my opinion 1500 will most likely not get crossed in this month and possibly next month also. So only a very aggressive trader should think of selling this call option. Of course, tomorrow morning after the results, IV, that is intrinsic volatility, will also come down. Therefore the prices may be different from what we are seeing right now, despite the rally or gap up tomorrow. And on the put side, the highest open interest is at 1300 strike with almost 17 lakh shares, whereas the highest open interest addition happened at 1380 strike price, so which is almost at the money kind of a strike price. That is very aggressive put writing. And why not? These people will end up making money because the results which are declared are better than market expectations. So tomorrow even the put prices will come down, and you can sell the 1300 put option. This appears to be a very safe play as compared to selling the 1500 call option. So from the option chain analysis, Infosys will hover between 1300 and 1500. 1300 will be an extremely strong support and 1500 will be very strong resistance. Look out for the price action tomorrow around the 1400 level and take your trade accordingly. So that's it from my end for Infosys. Have a profitable trading session tomorrow. Thank you for watching this video.
You can reach out to me on Twitter, Insta, LinkedIn, and of course, YouTube.